let's talk job order cost. This is the first of two that we're going to look at here. Next, and there's two of them, okay? You've got process cost, and you have job costing. Job costing looks at an individual job. Process cost ends up looking at the production as it goes through a process of like items. So process cost is used for production of large, let me put this backwards. They have process cost, okay, is used for the production of a large number of items that are all similar. Now you could say, on the other hand, job cost is used for unique items, handmade items, or things that will be have specific operations done only to that item. An example would be if you were to rebuild a antique car. That would be on the order of a job costing system, and it's not mass produced. So all the costs that are incurred can be related to that one job. I think that made sense. Here's some examples. You've got custom orders, you've got heterogeneous products and services, low production volume. Let's say somebody orders 20 of the same type of sign. Now you're going to kind of mass produce them, but they're going to be just unique. It's going to be a short run. And so you've got a lot of flexibility in what you do with each sign. On the other hand, you have process operations, and these are repetitive processes, sort of like bottles of water. Grain, okay, if you process any type of grain, you can't tell one piece of rice from the other, right? So it's just a large volume. There's not much flexibility in what you do. It's the same process over and over and over again. So those are your two types. We're going to look at mainly this one right here now, job order. It's kind of fun. Here's an example. Remember we talked about materials, overhead, and labor as costs, and then we had direct materials and indirect materials. The indirect materials went into overhead costs, and the indirect labor went into overhead costs. And then there were other various accounts that go into overhead that can't be directly traced to that product, yet they're needed, such as rent, utilities, depreciation on equipment, and things of that nature. So we start off with manufacturing costs. These are our materials. These are the costs we have. And they go into what we call a work in process inventory. And each job has a number, and the costs associated with each job accumulate in a work in process unit for that job. So once it's in work in process and we work on it and produce it and create it, when it's done, it goes to finished goods. And then when we sell it, it goes to cost of goods sold. So it's pretty much what we've been doing with financial accounting with a service industry, but we've added this work in process inventory. So remember this flow. You've got the materials, overhead, and labor, and indirect materials, indirect costs, or indirect labor are going to go into overhead. These all get combined for each job, and then the job moves through the process. Now, there are, obviously, we have to keep track of these costs, so you have what they call job order cost documents. In reality, this is all done on a computer. Used to be done all by hand. What you're going to be seeing kind of looks like it could be hard copy, but it also is a form that would be entered into in a computer. So you have a job cost sheet, you have a material ledgers card, you have a material requisition card, and you have time cards. Now, this keeps track of the cost, obviously. These two right here are going to look at materials, and this one looks at labor. So let's kind of look and see what these things look like. This is a job cost sheet, and you can see you've got the customer's name, you've got the address, you've got the number here, all the pertinent information, and then you have direct materials, direct labor, and see each time a material is applied, the date, the requisition number, and the cost is recorded. And this is just a running total of how much money has been used to produce this item. Same thing with direct labor. You'll see the time ticket here, you'll see the date, and you'll see the costs. And down at the bottom, you've got the totals. And then again, same thing right here. See this? With the overhead. Right now we've only applied, it looks like, the direct labor costs. And then at the bottom, this will be summarized, and you'll have a total for that job. And then it's signed off on. So that's a job cost sheet. Like I said, that will be in a computer, and you'll just tally the costs up as you go along. Now here's a materials ledger card. This is when the material comes in, and this this you could have on a computer also. It tells you the item and then the number that you brought in, or the number that is in. And you have its stock number, the minimum quantity that you want to have. So if you went below this, it would be automatically ordered. I guess they're saying this is the max that you want to have in at any one time. This is where it's located, and quantity to reorder when you reorder are 2 units. So all of this is kind of built into the computer, so you don't really have to go through and check all your materials. It should pop up in the computer and spit out an order when it's needed. And then you can see down here, this is just pertinent information about it. This is the unit cost, how much that total price is, same thing. And you'll get down here, and let's see, is this going out or in? These are received, these are issued, and this is the balance. This keeps a running total. This is your inventory, folks. This would be done on weighted average, more or less, and it is a perpetual inventory, so it's being updated daily. So this is the materials ledger card. This actually can be compared to raw materials inventory for a specific item. And then when we want to use that item, you have to have a materials requisition. Somebody will write this out, and then you will be able to go to the raw materials inventory on the floor, present that, and get that material. And then this, okay, withdrawal would come back and come out of the issued part. So it's kind of a nice little system. And this is a materials requisition for specific jobs. It'll keep a tally of it, how much has been used, and at the end of whatever your recording period is, then you would transfer these amounts into the work in process inventory. This is showing doing it in a journal entry. See how we've taken it out of raw materials and put it into work in process. You'll do the same thing with the indirect materials, only they will go into, they will come out of raw materials and they will go into factory overhead. So let's kind of see what's going on here. So here you have inventory. It shows your, this is an example of how this would work all the way through the process for raw materials. We purchased the raw materials, so it goes into the raw materials inventory right here. You did not have a beginning balance, so we purchased $1,200. Then we distributed $550 worth of direct material, and that went right into the work in process. You can see right here. That $550 was made up of job 1 and job 2, and that would be applied to the cards. This job 1 and job 2 are what you would call subsidiary documents that support what's in the work in process. So 2 journal entries. I'm not really concerned to remember these journal entries. I want you to remember the key accounts and how it flows through. So we purchased it. We removed it. It goes into work in process. From work in process, we then apply it to the job cards, job cost sheets. So labor costs are very similar. They use a time ticket, and there's direct labor that goes to the job sheets, and there's indirect labor that goes to the factory overhead ledger, or the T accounts for those. They kind of look like this. I don't know if anybody's worked in a factory and you've done piecework. A lot of times you're asked to fill out a time ticket on whatever part you're working on, and it will keep track of how many minutes you spent on that, and when you get done with that, you turn that in. It is calculated, the hourly rate that will be applied to the job you're working on. A lot of detail work is to follow these costs. So here's a labor ticket. Let's say this is a weekly labor ticket, and this is direct, so it's traceable to specific jobs, 15, 16, 17. And you'll see total direct labor for $1,400, and indirect labor is $1,100 out of those tickets. Again, that gets applied to your work in process inventory and goes to a payable. So here's another kind of a shows you the whole flow of it. So this one is use 5,400 hours of direct labor. Of this amount, 3,100 was direct labor for job 1, and 23 was direct labor for job 2. So again, you prepare the entry, and you show the work in process. It doesn't have anything in it right now, but you apply the direct labor here, and in this T account, obviously this is for your balance sheet, and then this is distributed to the job sheets for job 1 and job 2 to the direct labor. So now we need to talk about overhead, and I think I will just stop and start a brand new video so that this isn't so tedious for you to listen to. So I'll be right back.